Hey guys, and welcome to this video debrief of the post FOMC. Cheers, this is my fourth coffee for the morning. End of the week, it's been a long one. Let's get down to having a look at this post FOMC, see what happened, what drove us, what was the technical picture like, and then we're also going to have a look at a little bit of replay. I know you guys really enjoy those, and some footprints. So let's just have a quick look at what's been going on. So going into this session, we had a pretty messy FOMC. Next slide. There we go. So FOMC was really balanced. We had this buying tail at the bottom where we'd dipped into the prior week's gap, closed the gap that we'd struggled to close Monday, Tuesday, closed the gap through 5606 and 3/4, and then we traded down to the tick of the prior week's VWAP. Now that was the critical moment for one of the critical moments during the FOMC. That was a good opportunity to go long, recognizing that there was a potential for a look below the gap, and then failed back up. And then into the close, we had some Trump comments that basically drove us, wildly higher, right through the range, and we had a high around about 72s, I think it was, up into a high volume node. Really crazy, but it was very, very messy. But the key thing to take away was we had a buying tail at the bottom, and we were trading quite balanced into the week, and then we were closing relatively high up. But the question was whether or not we could see continuation to the upside, take out Friday's settlement, last week's settlement, and then take out last week's highs. And the key thing was, could we bring the month into balance and take out April's high, which was set at 39, 57.39. So these are the questions we were asking yesterday. If you have a look at our prep from yesterday, please go and have a look at it. I'll put the links in as well at the bottom, but it's really important to understand the context that we're trading in. But it was a very messy FOMC, but the key thing to take away was that we'd left this buying tail at the bottom right into this little VWAP here, marked out here. I've just highlighted this. It's the same profiles, weekly profiles from the prior week, but I just wanted to show you how important it was. Buyers were trying to hold above, above this VWAP, above this gap, and what we've seen is this little look below into the gap and then reversal. So we've been trading quite balanced. We've come down, tested through into the lower edge of balance, and then what's likely to happen then is we're going to go and test the upper side of balance. The question is, will we be able to take out the developing weekly highs up around the double O's? Would we be able to take those highs from the prior week, 24, 25, 57, 24, 25, and then we'll be able to take out April's high, which was here at 39. These are the questions that we were asking ourselves yesterday. There was a possibility for it. There was also a possibility that we'd fail back lower and go and retest the balance range lows and have another go at those VWAPs. Those were the two scenarios, but as the way they developed, it ended up moving to the upside. I think we had some bullish news which we're going to go through as well, which helped drive that. So those are the questions from yesterday's prep that we were looking for, and this is what we got left. Not sure what that thing is doing, but ignore that. But there's the buying tail from the FOMC, dipped into that VWAP, and there was a LVN down there as well, 50-day moving average as well. Really important to label your levels. I think it really helps your pattern recognition going forward. So I always do it. I know a lot of other furus don't do it. They just show you, oh, look at this nice little ribbon. I thought we should go long here, but why? Why is it important? You'll never know. You just have to rely on them, won't you? But what I'm trying to do is show you how to build a process to master your trading, or get better at it at least. Anyway, so the key things that happened were basically that little tail, buying tail. This was the spike into the close. Now that spike that I'm showing you now, it's an unfinished auction. It was ended basically by the close of the bell So the auction had not finished to the upside. So the areas that we really wanted to see defended was basically the base of that, which was down into the 08s, which was roughly the prior gap low, and also the prior 2 days lows as well. And we'd want to see whether or not we could hold that spike base, right? It wasn't confirmed as a buying tail because the auction hadn't finished. We'd have to see how things progressed into this session post FOMC to see whether or not that could be confirmed. And what we did, we see this source confirmation as we opened, we tested back down into it, tested into that spike base, looked just a little bit below, and then that sucked in a lot of shorts getting trapped down there. Buyers come in, and then they all start to cover. Bit of new money as well on the back of Trump, and then we're racing up higher. So this is basically what we're looking at. Let's have a look at what it looks like on a 5 minute. Oh no, we've rushed through to the footprints. There's the 5 minute. These are all the points I've highlighted here. These are all the key things that I looked at. This was the overnight we dipped back. This is post FOMC. So this after FOMC, we dipped down into the FOMC mid, held, and then we got this really quite aggressive at points. Grind up, took out Friday's settlement, went a little bit higher, but didn't quite take out Friday's high, and I think that kind of made people, short-term traders, a little bit worried. As we start trading back below, we ended up liquidating lower, dipped into the spike base, rotated up into the open, found sellers again, and this is what made it quite confusing, quite difficult. This little series of events was confusing for me, and I actually walked away after that, so I didn't take this trade. I didn't take this trade here that we're going to talk about, but that's another story. But it was looked like a bit of an open drive. There's the first candle from the session. It basically opened, tested into the overnight POC, and then pushed ground into that singles. At that point, that singles spike base from the FOMC, it holds, and that was an opportunity to go long. But then it drives up and it tests the open, and then again we find sellers. Given the fact that we've got this basically an opening print high, it looks a bit like an open drive, got selling into the open as well. This was a really this was potentially a trade, although I wouldn't like to take it given the way that we'd marched back up again. But then it stalls at the open, and then it goes all the way back down again, and we just take out that 59, the prior low, as we held we'd held that spike base, but then it just comes back to dip through it, and then you can see all the delta coming in that drives it higher. Okay, there were a lot of comments coming out at the same time from Trump at the time. I think there was a bit of disappointment about the UK-US trade deal. It was basically a nothing event. That was basically what was driving us down. But then he kind of turned around and started talking about China again, and then they were going to do a deal, and they were talking, and they want to do a deal, blah blah blah. But basically those comments kind of ended up basically shorts into a good technical area, good technical setup here for a long. You've got short covering potential here as well, and that just fuels the initial move. And then when we get into 7, Trump starts talking, you better buy some stocks, it's a good idea. I posted and tweeted that as well. Whenever he posts that, just buy. When Trump says buy, you just buy. You can see basically you got a nice easy 30 points out of that for not very much risk. This little interesting pullback here into the overnight high, really that's a really nice setup. That's a setup I like to look for. And then we go up into 9, and we just look above April's high, and then we see some profit taking into the close. Okay, so what we're seeing is we're struggling up here, up into the above 7,000. We're finding sellers. You can see here it's pretty choppy. Sellers come in to take advantage of these higher prices. Okay, so this is basically what's happened. The setup was basically this kind of look below fail into the IB. So over IB look below fail. We're going to have a look at that on the replay and the footprint. And also there was another nice trade here, the look above the April high, and then it just failed back down again. So these were the two trades that were really, really interesting. Last week's highs didn't really offer much resistance. We kind of sliced straight through it, and then we held the overnight high. That's a key telltale. You don't want to be taking shorts just yet. You know, whenever I see a key level sliced through, I don't want to take a short against it unless it starts holding to the downside. But anyway, let's have a look at the footprints now. I've got the mic on. Yeah, good. Okay, this is the look below fail. This is you know, there's your IB set, drives all the way up into the open. There's my open. I've marked it out. And again, I repeat, I highlight the levels. Okay, I don't just give them a number. The number is irrelevant to me. To me, I trade off the patterns, and the pattern recognition comes from detailing what it is that those lines mean. This is the IB. This is the IB mid. This is the opening range high, opening range low. This is the VWAP. These are the important, this is important for pattern recognition, not so much the levels themselves, okay? I can pick those out with my eyes closed basically, but what makes me recognize patterns is just being able to identify things that tend to happen. This is a particular one, is a look below fail, the IB. We also just look underneath that spike base that we were talking about. Into 56, 57s. It's all marked out here. Look, it's also a HVN according to this. But recognizing these patterns is a lot easier if you outline what those lines all are. Okay, these ribbons as well, they're areas of interest for me to trade. This is signifying yesterday's high, prior high. This is the FOMC high, and that's the spike base. This whole area here, anywhere in here, this was a gain zone for longs, and this was the initial long potential right into the spike base, just failing to touch. This was a good opportunity for a long, and then the second one, even better, was this look below fail, this huge volume block here, and then we marched on higher. Okay, very, very difficult, tricky to trade, because you really wouldn't expect, you know, given that fact that spike base holds, you go all the way up higher, you know, a good, you know, 35 points, and then rotate all the way back down, only to take that low. Shorts, you know, stopping through, long stopping through, but then shorts getting trapped, and then we start recovering, and there's the delta that flips. Really, really important to understand all these patterns, how they work. Look, you've got delta going negative into these lows, then it flips long. You see long, when I say long, it starts going blue as we start to recover. That's not always the case. Sometimes we have delta divergence, but lately delta in these thinner markets is working really, really well. Okay, we have another look. We're going to have another look as well at the high, the look above April highs as well on a footprint. But before we do that, I just want to just replay this low, and let's just have a look at it. I've set this up this time, so hopefully it's just going to play. So this is just as we're approaching into those lows. I'm going to speed it up a little bit. Hopefully it works. Yay, cool. I'm going to speed up to 5 times. I need to get my jigsaw back up and running. But we start trading. Delta's moving lower. Okay. I'm going to speed up just a little bit more. And now we're heading into that spike base from the FOMC. Right, that's the touch. Let's slow it down now. Right. Here we go. We've just taken the IB, and this is the block now. It starts to build. Look, a lot of selling. Do you see how? Let me just pause that now. All that selling there, that entire block there, only sellers coming in. Okay, and they're selling aggressively. And what do you want to see when sellers are you know, pushing aggressively? They want to get paid. What happens if they don't get paid? They start to cover. Okay, so recognizing that is really, really important. Let's hit play, and what I'll be looking for here is the deltas to start to flip. Some of these bars starting to turn blue, and basically that's just short covering. Once we get back inside the IB, then you've got the look below fail. That trade is on. Okay, so if you took it down here, recognizing that sellers were just not going anywhere, there's a lot of volume going through. This is particularly good on a ladder. There we go. Sorry, I've had that missing and not in view. But let's just hit play and see how it progresses. Okay, there's your first indication. And it just doesn't really look back from then. Okay, quite sudden, aggressive move back up into the IB. IB starts to hold, and then you get. We're starting to look for delta now. It's starting to flip. We're starting to get progression away from the IB. Now, still here at this point, you know, the shorts are still in control. They can come back and have another look at that easily. Okay. There now, we come back and sellers have one last go. Okay, leaves a tapered edge at the bottom of this footprint into this big bulbous low where all the sellers got trapped. Sellers are still whacking this. We're looking to see that turn now. That whole of the IB is very, very important. Now they're starting to see delta flip. And then we start to see progression to the upside. I'm going to just speed this up a little bit because we haven't got all day. But that IB starting to hold. And we're starting to see some pretty aggressive moves higher. Got this little nice order block here, but that IB, we've seen no progression to the downside at a key area that we're looking for supportive behavior. Okay, the spike base from the FOMC, we've seen that price action. We've seen basically a look below fail. This is basically a lot of this little block here is probably a lot of stops going off from all the longs here. And then you're seeing the delta just starting to rip higher as buyers get aggressive and we start to push higher. There's the test into the IB mid and VWAP. You could take this short here first time. That's a trade I like to take. But if that fails, you're in big trouble. Okay, if you're a seller and that IB mid now starts to fail, you're in big trouble. Okay, and this is pretty much how it unfolded. I'm going to stop it here. Hopefully that helps. These are very short little video analysis. I mean, you can go and do an hour of analysis on these footprints. But it's looking at the ladder is also very, very useful. But you need to get used to looking at those kind of things. So I encourage people to focus on ladders and footprints together as a tool. Oh, we just flipped there. This is the high. Okay, this is basically the move up into the high. Got a little bit of selling around the, but we're holding around last week's highs. So we're trying to hold this area, and then we progress up to the upside. There's the April high 39s. There's the value area low from the week before. That's marked out on the high time frame, and it just looks above. Nice little taper, and then you're starting to see delta just really accelerate to the downside. And this was a nice opportunity for a look below fail. Why would you want to take that trade? Look below, not look below fail, look above fail. Why would you want to take that trade, look above, fail? Well, given the fact that in the opening range we've got some pretty rotational behavior, up, down, up, down, up, down, nobody was really in control. There was an inkling that sellers and buyers were in this market. They were just letting each other have a go and waiting for better opportunities to get involved. So whenever I see large rotations off the open, then I'm always thinking that there's a possibility that sellers might come into this at a later stage. Okay, so have a look at this. Pause it, review it, go and have a replay, have a look at the footprints, have a look at how it works, how the interplay between ladders and footprints, how does a movement in a ladder affect the footprint, how's it drawn, how's the price activity drawn on a footprint. I think that's a good thing to do. Anyway, let's just crack on to the end. Takeaways. It was a choppy open. After we dipped down, we had these large rotations, gave us the inkling that maybe there's something more to come later on. Basically, sellers were potentially in this market. And then we'd seen overnight some profit taking up at those high levels above 5,700. We'd seen some profit taking lower. It's easy to give up. The reason I'm saying this is just basically that first test into the spike base had a huge rotation up into the open, and then coming to see it come back down again. It takes a lot of balls to take that trade after we've taken the IB low. But the setup is there. The setup is called look below the IB. It's a common setup that I look to take, and I would encourage you guys to look at it. And this is also a highlight. I really, I'm explaining the setups for you guys. I'm not just telling you where I'm buying or where I'm selling, or I'm not just giving you a ribbon and saying blindly this is an area to buy in. I'm explaining the setup, so then you can go away and actually look to take the trade yourself the next time. The key thing to recognise about everything that we've done today was that the technical picture was bullish above the FOMC singles. So basically that spike, the singles that were left there, the base of those, that was where buyers needed to show up, and they did. They briefly relinquished their control by dipping 357s, but we held at 53. So that's just a very small margin in this high volatility environment that can happen. And also recognizing the way that we dropped through, it was basically stops. Okay, recognizing that those were stops, that was key. There was a lot of profit taking up at the highs. We've already said that. So the two trades that we should take away from today was the look below the IB low. That is another opportunity to take a really strong long for higher. Market was news driven as well. Trump helped a lot, especially in the upper regions of the day's range, where he basically said just buy stocks. And the other opportunity was the look above the April highs. Those were the two really clean trades for the day. Hopefully this has helped you. Please like, subscribe, and I really appreciate all your help. And yeah, let's do it again sometime. Any comments? Very welcome.
Fed's Kugler says there could be some pullback in consumer spending.